It's Friday, November 24th. You're watching the Market Comment by Haralambos Bisuros here at XM.com. I'm Christina Marujos. The US dollar turned south again yesterday and continues to underperform against some of its major peers today. Expectations of several rate cuts by the Fed next year came back to haunt the currency, keeping the dollar index on course for its weakest monthly performance in a year. Today, although Wall Street is scheduled to close early, dollar traders may stay on their desk after the closing bell, as the preliminary S&P Global PMIs for November are due to be released. The manufacturing index is forecast to show that the sector contracted again after stagnating in October, while the services index is anticipated to point to a slowdown. Such numbers may add more credence to investors' belief that the Fed is likely to cut rates sharply next year and thereby keep the U.S. currency under pressure. Nonetheless, bearing in mind the Fed's higher-for-longer mentality, there may be ample room for upside adjustment in the market's implied rate path should upcoming data suggest that the economy is faring better than expected or inflation proves stickier than anticipated. Therefore, it may be too early to start arguing about a bearish reversal in the U.S. dollar. The yen traded virtually unchanged against its U.S. counterpart yesterday and continues to be trading flat today, as Japan's national CPI data during the Asian session today revealed that both the headline and core inflation rates rose in October, but by less than expected. That said, inflation still accelerated, which increases the likelihood for businesses and labor unions to agree on another round of strong pay hikes next year, thereby allowing the Bank of Japan to eventually exit ultra-loose policy conditions sooner than previously anticipated. Speculation on that front could keep the yen supported. Oil prices lost some more ground yesterday due to OPEC's announcement on Wednesday to postpone Sunday's meeting. This was due to expectations that the cartel and its allies might not deepen output cuts next year, with a source saying that producers are struggling to agree on quotas. Today, the black gold is recovering some ground as the latest tumble may be seen as an overreaction to the news. European stock markets ended Thursday's session in positive territory as the Eurozone and UK preliminary PMIs for November came in better than expected. Although the Euro area PMIs remained below 50, they suggested that a recession may be shallower than expected, while in the United Kingdom, the composite index returned above 50 for the first time since July. This was today's market comment here at XM.com. Have a great weekend.